Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 16th of November, Monday. As usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at last Friday's market movement, we can see gold extending rebound by 0.67%. The pair of GBPUSD climbed higher as much as 0.57%. The dollar index fell by 0.25% and oil furthering losses by 1.94%. So let's get into further details with the headlines of today. First off, let's discuss on the oil, where we can see oil price had pared most of its gains last week as the fear of rising COVID-19 cases globally offsets the vaccine's positive sentiment in the market. Now, last Monday's strong rally in the oil market comes amid the expectation of a strong oil demand recovery following the release of a vaccine. However, until the official release of the vaccine, investors' fear towards the record rising cases had kept the bearish pressure onto the commodity. Thus said, the crude oil price is now very highly dependent on the vaccine developments, whereby if vaccine is failed to be delivered in the market, we can see oil a major sell-off in the oil market back towards possibly the low levels we have visited in the past few months, back below $40 per barrel handle. So instruments involved here would be crude oil itself and also the Canadian dollar, where Canada's economy depends highly on the exports of crude oil. Moving on, let's take a look at the pound, where we can see the pound managed to end last week's market higher overall with the help of the Brexit hopes after Prime Minister Boris Johnson's top advisor Dominic Cummings, who is a strong Brexiteer, is set to leave his position. Now, the move came in just ahead of the make or break Brexit talks, suggesting that without the top advisor, Dominic Cummings, as we speak, the UK is likely to back down on its demands as negotiations comes to an end. So that has actually rekindled hope that a Brexit deal is still possible without the support of a tough Brexiteer from Johnson's side. However, as we speak, the currency depends a lot on the Brexit's fundamental support, so a no-deal scenario could trigger a sell-off in the market. So instruments involved here would be pound itself. So that's all for the fundamentals. Moving on, let's take a look at the news release for today. So please take note, time stated here at GMT plus 8. So today we only have one highlighted data to be focused on, where the Central Bank or Reserve Bank of Australia will have its central bank speech led by Governor Lowy at 4:40 p.m. So investors can actually listen to the speech from the central bank to get the latest update and the outlook for the Australian economy and how the central bank will discuss on its monetary policy to further support the country's economy. So from there, investors who are trading for the Asian pairs, namely the Australian dollar, can focus on the data to obtain further signal. So that's all for the news release. Moving on, let's take a look at the technicals. So here's an overview of instruments to be covered. First off, GBP US dollar H4 chart showing an uptrend. Euro Japanese yen H4 chart also in an uptrend. Same goes to the Australian dollar against Canadian dollar H4 chart also in an uptrend, whereas for oil in its H4 chart showing a downtrend. So let's take a look at the chart analysis, starting with the pound. So for the pound, we are still constructing the Fibonacci from the previous high towards the low, connecting from its body to the body, and we have also discussed on a possible resistance zone near 1.3260, and a further resistance would be somewhere around either here or towards here, close to 1.3300, or to be higher, around 1.3310. So moving back, the current price, we can see that the previous high reach was at the resistance of 1.3310, and below that would be the resistance at 1.3260. So overall, we can see that the pair continues to be traded way above all of its Fibonacci levels, signaling that the end of the bearish trend was over here towards the level of 1.2700, and as the pair now breaks back above the 61.8 Fibonacci, the pair will most likely further its gains towards the resistance level at 1.3260. So overall, investors following the MACD showing a bullish momentum suggest the pair to extend higher, and investors are advised to consider long positions at the current level 1.3210. Stop loss should be placed 40 pips from the level at 1.3170, and the take profit can be targeted first at the resistance of 1.3260 and a second target at 1.3310. However, for cautious investors, you can consider entering into long positions after a retracement back towards the 61.8 Fibonacci, which is a better entry point. So overall, aggressive investors can consider long positions at the current price, whereas cautious investors are advised to wait for the retracement before entering into the long positions. Next, for the Euro Japanese yen and the H4 chart. Now overall, from the candlestick pattern, we can actually identify a possible bullish flag formation, where we can see overall prices are forming lower high and a lower low, however with a support of a bullish pole over here. So overall, following the signal of a bullish flag will most likely indicate that the pair will be extending higher in the near term. However, we would wait for further confirmation. One would be the rebound from the support zone, also its moving average near 123.5, and a breakout point, we would wait for the breakout above the resistance reach around 124.2. So overall, to identify or to confirm a bullish flag pattern, we would require the breakout above the resistance at 124.2 before entering into long positions for the pair. However, it is also possible and likely that the pair might break below to form to move into a downtrend in the near term. So cautious investors are advised to wait for further confirmation, whether it is the breakout above the resistance at 124.2 or below the support of 123.5 before entering into positions for the pair. However, for aggressive investors, you can take the opportunity to enter into long positions at the current level following the rebound over here near 123.9. Stop loss should be placed 30 pips, or to be even safer, out of the support level at 123.5, and a take profit targeted all the way towards the previous high at 124.8. However, cautious investors, again, you are advised to wait for further breakout confirmation before entering into the market. Next, for the pair of Australian dollar, Canadian dollar. Now, moving back, we could form the Fibonacci from the previous high towards the low, and we can also form a resistance somewhere around here at 0.9570. So we can see that the pair is currently testing towards the resistance level, which is also considered a crucial resistance, where we have seen the pair unable to break back above and was traded in a medium-term downtrend, and now it is currently retesting the resistance over there. So MACD signaling a bullish momentum suggests the pair to extend higher after a breakout. So cautious investors here are advised to wait for a breakout confirmation above the resistance level before entering into long positions for the pair. Stop loss should be placed 30 pips at 0.95340, and a take profit of 60 pips all the way towards 0.9630. However, for aggressive investors, if the pair fails to break above the resistance level, aggressive investors can consider short-term short positions, stop loss, and a take profit of 30 and 50 pips. So lastly, let's take a look at oil in this H4 chart. Now, we are still looking at the strong resistance at 41.5 and a support zone near 39.3. So overall, we see that the crude oil is still being traded below the crucial resistance at 41.5, MACD still a buyer's bearish momentum, and this suggests oil to further be traded below the resistance of 41.5, possibly to fluctuate within a sideways range between the two levels. So overall, we are still looking at we are still anticipating a downward trend for the oil given its current fundamental support. So overall, aggressive investors can consider short positions at the current level 40.7. Stop loss should be placed above the 41.5, and a take profit first targeted at the 39.3 support, and a further support would be over here close to 37.5, or to be even lower, 37 would be safe. So overall, aggressive investors can consider short positions at the current level, whereas for cautious investors, you should wait for further confirmation whether the oil is able to break back above or break back below the support level to indicate further downward potential. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram. And feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We will see you next time on our market briefing, and happy trading to all.